If you think paying zero taxes, staying completely anonymous, and opening secret bank accounts is just for billionaires, think again. The ultra-wealthy, they've been using this one legal loophole for centuries, and no one has ever told how you can do it as well. The Rockefellers and Carnegies, they set this blueprint over 100 years ago, and today, crypto millionaires and global entrepreneurs are using the same legal strategy to hide their wealth legally. In this video, I'll break down exactly how private foundations work for the billionaires, how you can set one up also affordably, and how it lets you bypass major restrictions such as taxes and also information disclosures. Because guys, this is not just theory. This is a powerful financial tool that can literally change your perception on asset protection. So let's get into it. Now, before I reveal the country and the financial vehicle that we'll be using, let me first break down exactly the legal loophole that the ultra-wealthy have been exploiting for over a century. So back in the early 1900s, America's billionaires had a serious problem. They were making insane amounts of money. They didn't want to pay taxes, and their public was turning against them. The media painted them as greedy robber barons, crushing the working class while hoarding wealth. So the Rockefellers and Carnegies devised a two-step plan, one that didn't just protect their fortune, but also made them out to look like heroes. Step 1, rebranding as philanthropists. You see, they didn't want to be seen as ruthless tycoons anymore. So they launched a massive PR campaign, donating to universities, hospitals, and the arts. Suddenly, they weren't just businessmen, they were philanthropists. Step 2, the private foundation loophole. But here's where the real magic happened. They created private foundations to shield their wealth under the guise of charity. And this was brilliant because, number one, charitable donations are tax-free, always have been, and probably always will be. Number two, private foundations can own anything. Real estate, crypto, stocks, entire businesses. And most importantly, they can issue and receive loans. You'll see why this is crucial in just a minute. With the right legal structure, they built a system where nothing was in their name, yet everything remained under their control. Completely tax-free. Of course, keeping this setup running is not cheap. These billionaire families rely on elite family offices to manage everything, costing upwards of $5 million per year. Now, you don't need a billion-dollar family office to pull this off. What if you could get the same exact benefits, the privacy, tax efficiency, asset protection, without having to spend millions on lawyers and accountants? Well, that's exactly where Panama saw a business opportunity. You see, they had their own version of robber barons, but instead of oil tycoons, they had a completely different kind of empire, Pablo Escobar's network. And these guys, they wanted the exact same wealth protection playbook, but without the complexity of elite family offices. And most importantly, they needed absolute privacy. So Panama streamlined the system by creating a structure that is both easy and affordable, that anyone could use without needing Harvard-trained lawyers. And what they came up with was taking the best parts of a trust and the best parts of an offshore company and combining them. And here's what makes it so powerful. Number one, nobody owns it. There are no shareholders, there are no direct owners, nothing that ties it to your name. And I'll explain why that matters in just a minute. And number two, there's no major accounting or paperwork. Forget the compliance headaches. Panama kept it simple. But before we go any further, here's why it matters to you right now. You see, governments, they want to trap you and your wealth. If you've made serious money in crypto, built a successful business, or have any significant assets in your name, governments have two main goals. A, they want to know who owns what so they can tax every last penny out of you. And B, they want all of your wealth kept at home so they can keep taxing you for generations. You see, that's why you hear terms like ultimate beneficial owner, controlled foreign corporation. Translation, they don't want you to move your money offshore and escape their grip. And that's why billionaires create these structures that are so sophisticated, so polished, that from the outside, it looks like they're model citizens. But in reality, they're paying less tax than a full-time secretary.
You've talked about in your own office, for example, you pay a much lower tax rate with all of your wealth than, say, a receptionist does.
That's exactly right, Tom.
Now, don't get me wrong, there's nothing wrong with that. I think that taxation is theft in general, but since you're not part of the big club, you can't rely on corrupt, favorable politicians at home. What you want to do is implement the same billionaire foundation strategy, but offshore. And here's why. Number one, no country automatically enforces foreign judgments. Let me make this clear. If your country goes after your assets offshore, that place isn't going to bend over in 24 hours. And number two, these countries usually have far more affordable and less red tape structures than anything you'll find at home. So, as I previously said, you're going to use the same strategy that billionaires have used for generations, donating all of your wealth to a charity in a zero-tax jurisdiction, and then bringing it back to your businesses through loans. And I'll get into that in just a second, but first, here's the problem. Your home country doesn't just allow you to move all of your money abroad and be done with it. No, they've built a system where you are constantly on a leash, also known as controlled foreign corporations. And here's what I mean by it. If you own X% of a company abroad, and the percentage varies per country, your home country doesn't care where it is. It's still going to see it as yours, which means you're going to pay their taxes. So, how do you get around it? Simple. Just don't own anything in your name. The Panamanian Foundation is going to own all of your assets. And as I said previously, it has no owners. So no leash, no tax grip, and no CFC rules. Now you can even take privacy a step further by layering in nominees for key foundation roles, such as the founder or the council. But guys, let me be crystal clear. While this structure works great for tax authorities because legally the foundation owns all the assets, not you, when it comes to banking, not all banks are going to deal with foundations. You have to go to specific banks such as Bank Frick or Bandura Bank in Liechtenstein. In fact, the entire country is very favorable to trusts and foundations. Banks open accounts all the time, and they can be very useful to move money to and from offshore accounts. Obviously, to make the process smoother, you might want somebody who introduces you to the right account managers. Now guys, this is the most important part of the video because this is where you actually have to present this structure properly to your home country, like in theater. You see, buying the foundation is actually the easy part, but if you don't maintain it properly, guess what? It's worthless. And this is where a lot of people screw up, especially the do-it-yourself crowd. They think that they can just get a foundation, plow in their millions, and treat it like a personal piggy bank. Wrong. You see, let's say that you set up a foundation helping struggling artists, and then you buy yourself a ticket to Cancun for vacation with no paperwork, no justification. Guess what? Congratulations, you're now a criminal. You've just committed tax fraud. This is how smart people actually do it. Say you have a sister who is a struggling artist, which, by the way, you can put on the board and pay her a salary, but you're actually giving out grants to these artists, and it just so happens that your sister's art exhibition is in Cancun. Well, now all of a sudden, you're both on a fully tax-deductible business trip instead of a vacation. You see the difference? It's the same outcome, but one is seen as tax evasion, the other as tax optimization. And this is exactly what the wealthy and powerful do. Joe Biden, George Bush. The point is, they all create a paper trail. And this is pretty much what all accountants tell you in more complex terms. They say deductibles, tax write-offs, or grants. But what they're actually saying is making you look as debt-ridden and as poor on paper while you're actually living a rich life. Now, let's break down exactly how the billionaires structure these foundations step by step. So starting off with, let's say you're a successful crypto trader, you've made your millions in your business, and now you want it tax-free and to stay completely anonymous. Well, if you're just gonna plow in those millions directly into the foundation, guess what, guys? It doesn't take a genius to understand what you're doing. The courts, they're just going to rip up this structure apart, and you're not going to have any corporate veil protecting you. What the rich do is they create separation between themselves and their assets using trusts. It's the best tool to sever the chain between you and your wealth, and the beneficiary can be another trust or a private foundation. Now, you want to make sure that you structure the transactions correctly so they're seen as charitable donations, because gifts can be taxed. But this is a simplified diagram, of course. Your money now is in a private foundation. How do you get it back into the initial business? Because after all, there is a hole in it, right? Well, this is where the rich use the technique and the trick of giving out loans. Many don't know that private foundations can issue debt. And as long as there's a duration and an interest rate, the transaction is seen as legit. So as an example, what the wealthy would do is they would give out a loan for 10 years to obviously their own businesses at a very minimal interest rate, and they make it so that it is a lump sum payment on year 9. Now, when year 9 comes around, are they going to repay it? No. All they do is they extend the loan for another 10 years, and you rinse and repeat. And in the end, the wealth is tax-free pretty much forever, as long as it stays in the trusts and the private foundations. Now, you can get even more creative using tax deductibles, write-offs, asset stripping, but that's a separate video. The point I want to make here is that the rich, they take so much time and effort into making sure that it is presented properly, because their accountants and their lawyers, they look at it from the bank's perspective. They look at it from the government's perspective, and that's the difference.
Now, is the Panama Foundation the only option? No, of course not. It's just the cheapest and simplest one to set up. If you go to a company provider and get the base structure, no accounting, no banking, it should cost you roughly $2,000, give or take. But the real question is, why would you want a foundation that may end up not working? Because if you use it as a personal piggy bank or you don't present it properly, then it may end up just being a stack of useless papers. In the best case scenario, you wasted a couple of $1,000s. In the worst case, you get audited and the corporate veil is pierced. That's why the billionaires, they spend so much time presenting it properly. So sometimes there are better structures such as a Nevis Foundation or Cook Islands. By the way, the trusts are very good. Or even the United States in some situations. It all depends on your needs and tailored to a specific situation. Anyway, guys, that's it for today's presentation. If you enjoy this type of content, as always, share it with a friend, like and subscribe. It definitely helps with the algorithm. I made a previous video as a guide for anybody who wants to form an offshore company. Hopefully it will help some of you, but I'll be seeing you next time. And until then, bye-bye.